Broadcast is now starting. All attendees are in listen-only mode.
Good morning, ladies and gentlemen. This is Charles Sylvia with Cruise Lines International Association. Thank you for being on today's webinar. Today, we're going to provide you with an overview of the federal resources available to support economically impacted businesses during the COVID-19 crisis. I'm going to get right to it, but before I do, just a little bit of housekeeping. We will be accepting questions, and we'll have a brief period of time at the end. The webinar should last approximately 20 to 25 minutes, and then we'll have about 10 minutes for questions and answers. And if we do not get to your question, don't worry, we will be reaching back to each and every question to provide you with the answer to your question. So without further ado, please join me in welcoming our Senior Vice President of Global Government Affairs, Mr. Mike McGarry.
Thank you very much, Charlie, and good morning to everyone. I appreciate your introduction, Charlie, and thanks everyone for joining today's discussion. On March 27th, President Trump signed into law the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act. This bill was the third and most recent legislation in a series of measures passed by Congress to address the COVID-19 crisis. The primary focus of the legislation is to mitigate the economic impacts of COVID-19 and to provide economic relief to businesses that have been impacted. The provisions in the CARES Act that we are about to walk through would benefit small and medium-sized businesses in the travel and tourism industry that have been impacted by this public health crisis, including the cruise community. The relief is provided in the form of loans and grants that will be made available primarily through the U.S. Small Business Administration, or SBA, and loan programs established by the U.S. Department of the Treasury. Additionally, tax deductions and credits are made available to offset losses and increased costs experienced by impacted businesses. Given how much help is made available to you through the CARES Act, we wanted to pull this webinar together as quickly as possible. This webinar is intended to provide a high-level overview of available resources as we understand them and is not meant to be financial or legal advice. As some programs are still rolling out, we recommend you visit the Small Business Administration and Treasury Department websites for the latest updates and application procedures. We hope to schedule a subsequent webinar for you soon with a representative from the SBA to provide additional information on the provisions of the CARES Act and to respond to any questions that you all have if you have tried to avail yourself of some of this relief and were having difficulty in doing so. So please stay tuned for that. So if we can go to slide 5, please. I'm going to check my computer quickly because I somehow got knocked out of the PowerPoint presentation that was going to be on GoToMeeting, but that's okay because I have the presentation on my computer. So the CARES Act provides a number of resources through the SBA to support small businesses affected by COVID, as I have said. Some of these resources include, and I will go over each of these in a little more detail, the Paycheck Protection Program, Emergency Economic Injury Disaster Loans and Grants, and the SBA debt relief for existing and new SBA borrowers. So going on to slide number 6, starting with the SBA Paycheck Protection Program. The CARES Act includes nearly $350 billion in funding to create a Paycheck Protection Program, or PPP, that will provide small businesses and other entities with zero-fee government-backed funding to cover relevant business expenses and support the retention of employees. Loans can be for up to 2 months of your average monthly payroll costs from the last year, plus an additional 25% of that amount. That amount is subject to a $10 million cap. Up to 8 weeks of payroll and other costs will be given if the business retains its employees at their salary levels and the loans are used for payroll, rent, mortgage interest, or utilities. Principal and interest will be deferred for 6 months and all borrower fees will be waived. sole proprietors, independent contractors, and other self-employed individuals are eligible for loans, as well as American businesses with less than 500 people that were in operation as of February 15th of 2020. The loans have a maturity of 2 years and an interest rate of 1%. Applications can be made through participating banks and credit unions, and a list of participating lenders can be found at treasury.gov. Loans processing began on April 3rd, and the program will end on June 30th of 2020. Independent contractors and self-employed individuals can apply beginning April 10th. Going on to the next slide, SBA Emergency Economic Injury Disaster Loans. SBA Emergency Economic Injury Disaster Loans, or EIDL, are loans of up to $2 million that normally carry interest rates up to 3.75% for companies and up to 2.75% for nonprofits, as well as principal and interest deferment for up to 4 years. The loans may be used to pay for expenses that could have been met had the disaster not occurred, including payroll and other operating expenses. The CARES Act includes $10 billion, that's billion with a B, in funding to provide an advance grant of up to $10,000 to small businesses and nonprofits that apply for an SBA EIDL loan. The grant funds are available within 3 days of applying for them. The grant does not need to be repaid, even if the grantee is subsequently denied an EIDL, and may be used to provide paid sick leave to employees, maintaining payroll, meet increased production costs due to supply chain disruptions, or pay business obligations, including debts, rent, and mortgage payments. The grant is available to small businesses, private nonprofits, sole proprietors, independent contractors, and tribal businesses, as well as cooperatives and employee-owned businesses who were in operation on January 31, 2020. SBA Express Bridge loans are also available to provide funding quickly while awaiting a decision on an emergency EIDL grant. An existing relationship with an SBA lender is required. Recipients of an SBA interruption loan under the Paycheck Protection Program cannot use this loan for the same purpose. Moving on to the next slide, please. Debt relief for existing and new SBA borrowers. The stimulus includes $17 billion in funding for a provision to provide immediate relief to small businesses with standard SBA 7A 504 or micro loans. Under this provision, SBA will cover all loan payments for existing SBA borrowers, including principal, interest, and fees for 6 months. This relief will also be available to new borrowers who take out an SBA loan by September 27th of 2020. The measure also encourages banks to provide further relief to small business borrowers by allowing them to extend the duration of existing loans beyond existing limits and enables small business lenders to assist more new and existing borrowers by providing a temporary extension on certain reporting requirements. While SBA borrowers are receiving the 6 months debt relief, they may apply for a Paycheck Protection Program loan that was mentioned earlier, which provides capital to keep their employees on the job. The 6 months of SBA payment relief may not be applied to payments on Paycheck Protection Program loans, however. The stimulus also includes a provision that allows SBA to waive fees for veterans and their spouse in the 7A Express Loan Program. Under current law, SBA may only waive fees on 7A Express loans to veterans when the president's budget does not project a cost above zero for the overall 7A loan program. Moving on to the next slide, direct payment programs. So there are two programs involved under direct payments. One is called Recovery Rebates, and the other is Enhanced Unemployment Assistance. So going to the next slide, Recovery Rebates. All U.S. citizens with adjusted gross income up to $75,000 or $150,000 for married, who are not a dependent of another taxpayer and have a work-eligible Social Security number are eligible for the full $1,200 a month or $2,400 for married rebate, which will be paid by the Treasury beginning this month. In addition, payments will be increased by $500 per child. The rebate amount is reduced by $5 for each $100 that a taxpayer's income exceeds the phase-out threshold. The amount is completely phased out for single filers with incomes exceeding $99,000 and $198,000 for married couples. For the vast majority of Americans, no action is required in order to receive a rebate check, as IRS will use a taxpayer's 2019 tax return if filed, or in the alternative, their 2018 filing. Moving on to the next slide, please, which is unemployment assistance. The CARES Act expands eligibility for unemployment assistance through December 31, 2020, to provide payment to those not traditionally eligible for unemployment benefits, including self-employed, independent contractors, those with limited work history, and others who are unable to work as a direct result of the coronavirus public health emergency. Under the CARES Act, qualified recipients will be eligible for up to 39 weeks of unemployment insurance benefits. The CARES Act provides an additional $600 per week above the current state benefits for up to 4 months. Most states currently provide $400 per week, so the total amount provided could be up to $1,000 per week, depending on the applicant's previous income. The application process is managed by the individual states. Many states are still in the process of rolling out the applications for enhanced benefits. Some states have indicated they would make the benefits retroactive. Going on to the next slide, which is tax relief. The CARES Act provides tax relief to businesses affected by COVID-19. We're going to highlight a few provisions here, but you may also wish to consider speaking with a tax professional to see how the tax changes in the CARES Act affect your unique circumstances. So the tax provisions fall into 3 buckets: employee retention credit for employers, delay of payment of employer payroll taxes, and net operating loss relief for corporations. So going to the next slide, we'll begin with employee retention credit. This provision provides a refundable payroll tax credit for 50% of wages paid by employers to employees during the COVID-19 crisis. The credit is provided for the first $10,000 of compensation, including health benefits paid to an eligible employee. The credit is provided for wages paid or incurred from March 13, 2020 through December 31, 2020. The credit is available to employers whose 1, operations were fully or partially suspended due to COVID-19 related shutdown order, or 2, gross receipts declined by more than 50% when compared to the same quarter in the previous year. The credit is based on qualified wages paid to the employee. For employers with greater than 100 full-time employees, qualified wages are wages paid to employees when they are not providing services due to the COVID-19 related circumstances described above. For eligible employers with 100 or fewer full-time employees, all employee wages qualify for the credit. whether the employer is open for business or subject to a shutdown order. Moving to the next slide, please. Delayed payment of employer payroll taxes. This allows employers to defer 100% of their 6.2% Social Security payroll taxes for the remainder of 2020, with 50% of deferred tax due on December 31, 2021, and the remaining 50% due on December 31, 2022. In terms of the net operating loss relief for corporations, this allows taxpayers to carry back 2018, 2019, and or 2020 net operating losses for 5 years. The net operating loss can fully offset prior year's taxable income and result in a refund. Taxpayers can elect not to utilize the net operating loss relief carryback provision for any or all years if they like. So moving on to the next slide. Treasury loan programs. So under the Treasury loan programs, there's a category for economic stabilization loans. A total of $500 billion is made available through the Treasury's Exchange Stabilization Fund to provide loans, loan guarantees, and other investments to eligible businesses that have not otherwise received adequate economic relief in the form of loans or loan guarantees from the CARES Act. Eligibility is broadly defined. However, any business receiving assistance under this program must be incorporated or organized in the United States with significant operations and a majority of its employees based in the United States, and no alternative financing mechanism can exist. The support can come in the form of secured loans through banks, direct loans through the Federal Reserve, and direct federal investment. The loans do come with certain restrictions, including salary freezes and providing a possible equity interest for the government in the company. While this program is geared towards larger businesses, the CARES Act encourages the Federal Reserve to establish a program to support loans to small and medium-sized businesses. And as we get more information on that, we'll provide it to you. The Treasury Department is expected to release additional details on the application procedures for the economic stabilization loan soon. Moving on to the next slide. So in summary, as I mentioned at the beginning of the presentation, this webinar is intended to provide high-level overview of available resources as we understand them. As these programs are still rolling out, we recommend you visit the SBA and Treasury Department websites for the latest updates and application procedures. Our hope, as I mentioned earlier, is to set up a follow-up webinar with a representative of the SBA to provide more details on the provision in the CARES Act for you soon, and to respond to any questions you have or to discuss difficulties that you may be having in availing yourselves of some of these programs. Now I will turn it back over to Charlie to lead us through your questions. Thank you very much.
Thank you very much indeed, Mike, for this presentation. And ladies and gentlemen, for those of you who may have joined the call after the introduction, I just want to reiterate that if you do enter a question into the chat, into the questions module, we will get to every single question directly. I do have a handful of questions, though, that we have taken that I will ask right now. Mike, Minerva asks, I am a home-based travel agent, a sole proprietorship. I have 2 independent contractors. Like so many, we've lost revenue due to cancellations. Do we qualify for a relief package? Thank you, Minerva.
Okay, thank you very much for that question. You may be eligible for SBA programs. For example, the guidance released for SBA's Paycheck Protection Program specifically makes sole proprietors and independent contractors eligible for relief, subject to the terms of the program. You may be eligible for other programs as well. Thank you.
Thank you, Mike. Here's a question from Melissa. We are commission-based. How can we prove we have lost money?
Okay, good question. Thank you. So the guidance released for the Paycheck Protection Program appears to include commissions in the definition of lost income. You may be able to provide past records to establish lost commissions. Thank you.
Thank you. Thank you, Mike. Let me see. We've got a question here. Oh, good. Yeah, this is a good one. Melody asks, please give any specific information for home-based agencies. What specific records or information will be needed to file for any resources?
Okay, another good question. So home-based agencies may be classified as sole proprietorships based on how your business is structured. The SBA provides relief for those types of businesses. So your lender, I would check with your lender. Your lender would be able to guide you through the documentation that's required. Thank you.
Thank you, Mike. Let's see here. Okay, Helen asks, can the application be filled out online?
So generally, for SBA loans and grants, loan applications are filled out through the participating lender that you choose. Many may have online applications. The SBA has a list of available information you will need to provide to your lender. You can also, I would just add that you can also go to the SBA website to see if they have applications up there, but much of it is handled through a participating lender that you choose. Thanks.
Thank you, Mike. Okay, we have a question here from Marty. Is there a clear, uniform application that has been released, or does this application process have to be started with a local bank or other financial institution?
Okay. So the application will vary based on the program for which you are applying. The application process for SBA loans and grants will be made through a participating lender, that you choose. If you qualify for recovery rebates and the IRS already has your bank information, the government will use the information they already have, and it's likely no action will need to be taken on your part to receive the funds. Thanks.
Thank you, Mike. Ladies and gentlemen, we're going to stop the webinar at this point. We do need to get this team, the Global Government Affairs team, back to championing on your behalf and on behalf of the entire cruise community. Their time is very much appreciated. Mike, I just want to thank you and your team, Brian, Reed, and everyone who works on CLIA Government Affairs for your time and insight. Ladies and gentlemen, all of your questions will be captured and responded to. And Mike, if you have any last words you might want to share with everyone.
You know, I would just like to say, I know that everyone's going through a hard time, and I hope everyone is staying safe and healthy, and that we're able to provide any assistance to you that we can to help your businesses, to help your situation. You know, there is going to be a fourth relief package that we think is going to be considered fairly soon. We are assessing what are the needs of CLIA's travel trade members that were not addressed in relief package number 3, that we're going to try to get in relief package number 4. So if anyone has any thoughts on that, we would welcome your thoughts. Let us know. Perhaps you could send an email to Charlie, and then he could forward it on to me and to my team. But we would welcome that input. We do want to help. We do want to advocate on your behalf. You're a critical part of this industry, and we want to do all that we can to help. So thank you, Charlie, for making this available, and thank you, Danielle, for your work.
Thank you, Mike. We appreciate it. And ladies and gentlemen, you continue to be the front line of this industry. I speak with travel agency owners and managers and travel agents themselves every single day. And I will tell you that we will come back from this. I want you to maintain your positivity. I want you to do everything you can to shore your ship so that when we get to the other end of this, we will all be together and able to propel this industry forward. Ladies and gentlemen, thank you for your time on the webinar. This is Charlie Sylvia with CLIA. Have a good rest of your day. Goodbye.